This video is for the lecture topic 5. It is about the profit planning and control. Basically, this topic is about budgeting. Budget is one of the most important aspect of the management accounting. Okay, this topic mostly is related to the planning and control. You have to remember in topic 1 we have discussed about the function of management. We have discussed about what are the things that management generally do in an organization. Remember the purpose for knowing about the function of management is related to the work of a management accountant. If you can remember, a management accountant is a staff that support the function of managers. Management accountant provide information to managers, and managers makes the business decision and operation and handle the operation. Okay, so if you can remember the three basic function of managers or management, first planning, and then motivating, implementing. First, the function of management is first to do the planning, and then the second one is implementing the plan, and the third one is doing the controlling activity. Okay, this topic mostly are related to two main function of the management, planning and controlling. So just to refresh your memory, planning is something that involves developing objectives and preparing various budgets to achieve these objectives. So in management accounting, when a manager want to plan something for its organization, we as the management in the management accounting side, we provide budgets to help manager to plan. And then the second function that of management that is related to this topic is the controlling. Control involves the steps taken by management that attempt to ensure the objectives are attained. So if you can remember, controlling activity is something like this. The manager will compare the actual data and the planned data, and then the manager has to evaluate whether their work is good or not good, favorable or not favorable. Okay, like you know that management accounting is not something that is compulsory. There is no law and regulation that requires a company or an organization use management accounting, no. But it is a very good practice for an organization or a company to use management accounting. So like budgeting, it is not compulsory for a company to use budget, but if the company or organization use budget, the company or organization will get several benefits, so or advantages. So the first advantage of using budget is, when there is a budget, it encourages people inside a company or organization to think about and plan for the future. And then budget helps the company or organization to define goals and objectives. And also budget will help the company to uncover potential problems or bottlenecks or limitations. And then the budget also can be used as a tool to allocate resources within the organization. And then a budget can help to coordinate activities within an organization. And then a budget can be used to communicate the business plan with people inside the business or organization. Okay, something that you have to know about budgeting is this one. So the first thing that you have to know is responsibility accounting. So responsibility accounting is a concept that says something like this: managers should be held responsible for those items and only those items that manager can actually control to a significant extent. Let's say you are a manager. In the future, let's say you are a manager. So always remember, you are responsible to something that within your control only. For example, if you are a manager in the production department, so the thing that you are responsible to is only limited to things that you can control. For example, you can control the quantity of the material, the labor hours, etc. There are things that you cannot control. For example, the price of the material. Can you control that? You cannot control that. If the cost of the production increases because of the price, there is an increase in the price of material, the price of raw material, then you cannot be responsible for that. You are only responsible for the things that you can control only. A marketing manager, he is responsible to do the marketing. If there is a decrease in the demand for the product because of the economic recession, then he is not responsible for that. His responsibility is limited to the things that he can control. Economic recession is beyond the control of the manager. So always remember, a manager or anybody in an organization can be held responsible for only the things that he or she can control only. Okay, so something that is related to budgeting is like this. Okay, so most of the time companies, they prepare the budget for 1 year. That is the common practice. Some businesses, they are willing to do more frequent than that. They prepare a monthly budget. Some businesses prepare a quarterly budget. Other companies only prepare two budgets per year, half year budget. And another thing that you have to aware that most businesses, they have short-term budget, mid-term budget, and long-term budget. Long-term budget is more than 1 year budget. That is their practice. So it depends in a company, but the most typical practice is a company or a business will have at least a yearly budget. Okay, so the thing related to the preparing of a budget. So the typical practice is like this. A company will prepare a budget. They will prepare a budget for 1 year. Okay, so they prepare the budget before a new year is started. For example, now the year is year 2020. So most companies, they prepare a budget for year 2020 before this year is started. So in the month of maybe October, November, December 2019, they already doing works to prepare budget for the year 2020. So that is one thing. Another thing is a good practice in preparing a budget is called a participative budget system. Participative budget system is like this. The top manager or top management will prepare the budget, but they will get input from the lower level managers. They will get input from the supervisor, and then from the middle management or middle managers, and then they use all this input to prepare the budget. That's the practice that is set as a good practice, because lower level managers and supervisors and even workers, they know what happened in the production process, in the other activities in the business. They know, and they will send input to the top manager, and top manager prepare a budget that is most they try to prepare budget that is the best for everybody in the company or in the organization. So remember, the good practice is we can say that the good practice is a bottom-up practice. The top manager prepare the budget, but they prepare the budget based on input that they get from the lower level managers and supervisors, and maybe workers also, other lower level workers. Okay, so there are several things that is another thing that is important for in the budgeting process is the human factors in budgeting. Okay, so remember in the the slide number 3 in this lecture, we have seen there are many advantages of using budget in a business or organization. So you have to remember that, you have to aware that a business can get these benefits of budgeting if the degree to which top management accepts the budget program as a vital part of the company's activity. If the top manager think that the budget is very important, then they will get the benefit. If the manager thinks that budget is not important, they just prepare budget, but they think it is not important, they just do their management activities without referring and depending on the budget, then they will not get the good benefit of budgeting. The second thing is the way in which top management uses budget data. So there's another thing. If the top management use the budget when they do their management activities, then they will get the benefit of the budget. But if they do not use the budget, then they will not get the, if manager do not use the budget, then they will not get the benefit from the budget. Okay, and other human factors related to budgeting is like this. If the budget is set to be very high, let's say the business is a small business, but the sales target is like $2 million. which is very high. Then if the budget is set at a very high point or dollar or quantity, then one thing that will happen is the people or workers will become discouraged. They know if they work very hard, or they use all the thing that they can do, still they cannot achieve the budget. So if the budget is set at the very high point, then the workers will become discouraged. And the second thing is, if the budget is set at very low amount or number or point, then what will happen to the workers? The workers will become complacent, because they know every day they go to work, if they do their work like they do not work very hard, still they can beat the budget. So the workers will become complacent. If the budget is set at very low point or number, then the workers will become complacent. So the good point about budget is you have to set the budget at the point where the number is challenging. Then the workers will understand, if they work hard, they will beat the budget. If they can beat the budget, they are good. And then so if the point is a challenging point, the workers will know that if they work hard, they can beat the budget. If they do not work hard, then they will perform below the budget. So that is the good budget. So workers will work hard to beat the budget, and maybe they can get rewards for that in terms of bonus, salary increment, etc. So always remember that. Okay, who are the people that is responsible to prepare a budget for a company? So if a company or a business is a small business, then the person who is responsible to prepare the budget is the owner of the business. Like you have a restaurant. A restaurant is typically a small business. So who is the person that is responsible to prepare the budget? The owner of the business. That is for a small business. But if the business is a big business, like Petronas, TNB, Telecom Malaysia, big businesses, they will have a budget committee. A budget committee is a committee that is responsible to prepare the budget. The members of these committees are the top level managers, production managers, controller, marketing manager, IT managers. So these high level managers, they form a committee called the budget committee, and they work to prepare the budget with the intention that the budget is the best for everybody in the company. So if there is a question asked you, who is responsible to prepare budget for a business? So the answer is, for a big business, the budget committee is responsible to prepare budget for the business. But for a small business, then maybe the owner of the business or the manager of the business is responsible to prepare the budget. Okay, so the thing that you have to know, another thing is the main or number one budget that a company will have is the master budget. Okay, this is the very basic and very the main type of budget that a company will have. So it is called a master budget. This master budget contains sales budget, and then production budget, and then direct material budget, direct labor budget, manufacturing overhead budget, and then selling and admin budget, and then cash budget, and then at the bottom one is the budgeted financial statement. So you can see here in the master budget, you just have to remember. So if there is a question asked you, what is the main or the most important budget that a company should have, the answer is the master budget. So you see here the master budget, the first thing that a company has to do when they prepare the master budget is to prepare the sales budget. So sales budget is a budget that a company use to predict how many sales that they want to make in the, let's say, next year. So they have to set the target or the expectation or the estimate of sales. The estimate of sales is in terms of dollar of sales and quantity of sales. How many dollar of sales they estimate they will do next year? How many unit of product they will sell next year? That is the thing that they have to decide first. They have to prepare the sales budget first. When they know the quantity of sales and dollar of sales, then they will prepare the production budget. The production budget is like the budget how many unit of product they will produce. Let's say the target, the next year sales is targeted at 100,000 unit product. So after they prepare the sales budget, they have to prepare the production budget. Do they have to produce how many unit of product they have to produce? Their target or sales budget is 100,000 unit. They have to produce maybe more than that, because they have to keep some inventories. So let's say the sales target is sales budget is 100,000 unit. They will produce 120,000 unit. 2,000 unit is for the stock or inventory. And then after they have prepared the production budget, they can prepare the direct material budget. So they know they can predict or estimate how many materials that they will need in the next year. And then they can prepare the labor budget, how many labors they will need next year, or how many labor hours. And then they can prepare budget for manufacturing overhead. And then they can prepare for the selling and admin budget. And also they can prepare the cash budget. They can predict how much cash they need in the next year. And then at the end of the process, the company or the organization can prepare a budgeted financial statement. They can predict how much profit they can make next year, or how much profit they want to achieve next year. And then they can predict the assets and liability and equity estimated for the next year. Okay, thank you very much. This is the first part of the lecture for this topic number 5, profit planning and control. You can communicate with me in the comment section.